Welcome back. And Tata Motors is a stock which will be in focus. We spoke about it earlier this morning. First ever quarterly earnings posted by the demerged entity of Tata Motors, PV and CV. This one is, of course, PV. Reported a profit for the quarter. But of course, there is an exceptional item embedded there. Giving us a perspective and context, Srishti here with a number crunch.
Well, yes, when it comes to Tata Motors earnings, this time around we have seen the bottom line to be in the red. 6,368 crores is the adjusted profit is what the company has reported, while in terms of the other financials, they were way below than what the street was penciling in. But the big key takeaway remains to be the JLR guidance, which has been cut down sharply lower from 5 to 7% of JLR EBIT margin guidance for the full year of FY26. The company has slashed it down to just 0.2%, and they are expecting a free cash outflow to the tune of 2.5 to 2.8 billion pounds going ahead. But along with that, in terms of the India business, that remains to be quite resilient because the margins have seen an improvement on a quarter-on-quarter basis. There are new product launches. Just this weekend, we have seen Tata Sierra getting unveiled, and going ahead, the company has guided for further launches in the second half, and that is expected to support the numbers for their India PV division. But along with that, the overall commentary does remain to be on the positive side, where the company is highlighting that they are expecting a strong rebound in their overall financials volumes front in the second half. But the key challenges with respect to JLR does remain, and that is being highlighted in the management commentary as well. First up is the US tariff related issue. Along with that, there's a China luxury tax that is impacting the volumes, and analysts do believe that in the near term, the pressure will persist from these particular factors. Though on the production numbers, that was a washout quarter for JLR division in Q2. Q3 is expected to have a marginal impact, while it will be in Q4 where the company and the brokerages are expecting the full resumption in terms of their volume performance. When it comes to their India division, the company has guided for a growth in their India division as well, wherein they are saying that the H2 is likely to be in double digits with full year at 5%. So that's about Tata Motors earnings. Yes, of course, JLR was the main culprit out here, but brokerages have also gone ahead and slash their rating as well as target price. When it comes to Elara, they recommend a sell rating now with the target price of 363 rupees, while for Goldman Sachs as well, they are trimming the target price from 390 rupees earlier to 365 rupees now, and cut the FY27-28 EPS by up to 4%. Back to you.
Thank you so much for that, Srishti. Of course, pressure expected. Not only are the guidances for JLR cut, there's also reasoning that this could well spill over into Q3 as well. So not looking pretty per se. And Kunal, what's your view on charts?
I think that's one of the reasons why Tata Motors has underperformed, Harsh, because for most part of this rally, there have been phases where, Eicher Motor has led, Maruti has led, M&M has done reasonably well in a certain phase, but Tata Motors in all of those phases have underperformed. Whether you look at Tata Motors CV, of course, the charts are very, very recent, but then on the PV side, I think the stock has been a huge underperformer. There was a point where the stock was stuck at the 420 range on the upside, but that range is also now drifted to sub 400 for Tata Motors PV. So I think in that sense, I would probably expect the stock to remain as an underperformer. There has to be a point where the stock comes into a breakout. That breakout signal is not yet there. And that happens when either the stock breaks past about the previous resistances, volumes increasing as a chunk where you see that there's more accumulation which is happening. Those signs are still not visible for Tata Motors PV.
Okay,